it's time to talk about key levels. We've just spoken about the basis of our technical trading market structure, where we look at highs and lows and how they react to one another. And now it is time to talk about key levels. So, what are key levels and how do we use them? Key levels are my take on support and resistance, which is essentially areas where price bounces from. Now, when it comes to support and resistance, I'm very selective. You've probably learned a thing or two about it, even if you are new to the game. But the thing is, with general support and resistance, people seem to plot them wherever they seem fit. Now, the problem with this is you are going to end up moving your support and resistance levels to suit what the market is doing. So I'll give you an example of that. Just now, we'll scale in and I'll just give you an idea of what I mean. So let's say then that we have here this market, okay? And we are looking at the price point down here. We want our support resistance. Basically, then we plot a support. We see this low point in here. And we then see, resistance, say, up here. And what we're going to do then is look to buy from down here, sell from up here. So this is the general way of using support and resistance. Now, the problem with this is because we don't actually have any logic behind the levels, except for an area that we've seen price bounce from, we are actually prone to move these levels to suit our analysis. Now, what I mean by this is if we were focusing on this level as the support because we saw this bounce and we thought, okay, that's a valid support. If we actually then saw the support give way, we may then think, right, let's actually look. There's support down here, right? Because prices bounce from here. So price is going to bounce from here again. So then you can actually end up moving your support and resistance around, which, if we then push back through again, we may then look to bring the support and resistance down again. It's essentially a quite inaccurate way of focusing on support and resistance. So for example, then if we just got that little run up, let's say we see this bounce from here, we might then be looking at this as a support, right? And, things are going to get a little bit messy, right? We end up moving things around a lot just to try and suit our own analysis. So while, it will work a few times, it can be messy and it seems a little bit of illogical to actually be moving these support and resistance levels in line with what you believe. Now, that's the problem with it. You're prone to actually moving your support and resistance levels in line with your thoughts rather than what the market is really displaying to you. So what I actually do then, I'm very selective about my key levels, very selective about my support and resistance, and I actually use what appears to be institutional levels, okay? Now, I'm not saying that I trade like the banks, nothing like that. I'm simply using my experience in the markets to present to you the most effective support and resistance levels that I've found and I've used for many years. So these levels are the levels ending in 0, 250, 500, and 750. Okay. And that is all I'm going to be using until I really scale down to these low time frames. So for general trading, this is the monthly, the weekly, the daily, the 4 hour, the 1 hour, the 10-minute even. For these charts, the only levels I'm interested in are the zeros, the 250s, 750s, the 500s, and the 750s. So let's actually go ahead and plot some of these on, and I'll show you them in action in the market. So let's actually look at 136.50, 136, 750. Let's try 136. Just a few here plotted on. And let's actually do then the 750 up here. So 137.750. Right, so we've got these levels plotted on the chart. Let me just do one more. I want to have a nice broad example here to show you. These ones down here. So there we go. We've plotted a bunch of these levels on the chart. Not every single one, but a few of them. I'm thinking we should probably see some good reactions here. So focusing on this near-term market structure then, we've only got, 250s, 500s, zeros, and 750s marked on the chart. So if we actually look at these levels then, starting from this low point, starting from the bottom level, 135.250, we see that numerous times they react in the market, okay? So in this instance, we see this bottom level. It has come down here, reacted as a resistance, and then the market fell down. So that's the first area we've reacted on that level. Now we see then we came up over this level, we retested it 1, 2, 3 times. So then you can see that it's actually acted as a support point, right? And we can see that the 1, 2, 3 reactions into it were fairly precise. This one came just shy, but these two wicked into this level. So that shows that this is a precise area to focus on, right? Now, for example, if we were looking to buy from this level, we would have executed some really nice buy entries. Same again here, if we were looking to sell from this level, we would have found some really nice selling opportunities. So let's remove that one for now, and we'll focus on the next one, 135.50. We can see here 1, 2, 3 reactions there. Push through, broke back above, closed back above. And then here again, we have kind of a 1 wick, this closure thing, 2 wick, 3, 4, 5 reactions there. Come back down, wicked into it, 6 reactions there. So you can see that these levels are continually met time and time again. The next one, 136, the point zeros, right? These are the biggest key levels, the most important major key levels. The rounded off. So for example, 135, 136, 137, 138. These are the key levels that we really want to focus on. Now you'll see that price is magnetized to these ones. We can see here numerous reactions, too many to count, where price ran around that 136 level. We then retested it and started a collapse. We came back up, retested it, price stalled again. So many reactions once again, continually retesting this level over and over again. Now you'll see that this level is very precise, and we do get some really precise reactions into it. For example, this wick here, which taps right into that level and then bounces. This one here, where we came for a quick spike, tapped perfectly into the 136 level and then ran off again. Here again, there, you can see supporting it with the closures perfectly, and so on and so on. So these key levels, these zeros, 250s, 500s, 750s, are the most accurate support and resistance levels, and really the only ones you're going to need. So very clear to see 136.750, multiple reactions, resistance, support, resistance, resistance, support, 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 resistance, support, so many reactions. And we can see again up here, we have all of these reactions respecting these levels. So as you can see, they're very accurate levels, and essentially the only levels we need to focus on. We don't need to actually sit here and try and work out where the support and resistance levels are. We can use the levels that are being used by the bigger players in the market, the ones where the orders are stacking up or profits are being taken, things like this. Okay, so all we need to do when we're plotting our support and resistance on a chart is dive onto a chart, get our horizontal line tool, and then actually plot 750, 500, 250, and so on and so on and so on. And that's actually going to then show us the nice precise levels. So let's just do an example daily chart. I'm going to just plot them on here without even looking, and we'll see how well do these levels react. So let's do 1.30, 1.31, 1.3150, so on and so on and so on. And then we'll actually look when they're all on, how well do these levels react in the market. Right, so we've just got a few on here. If we look at these, it's even scale back, right? We can see then market runs into it. We consolidate between these two levels, between 128 and 130 there. So 200 pip range, market consolidates between. Also, of course, magnetized to that 1.29 level. And then we can see when they break, they come back down. They are retested as support and resistance levels. Time and time and time again. Okay, seeing these reactions off each of these key levels. See, that's all we really need. Okay, consolidating, trading through these ranges, acting as resistance there, and then we break, we come down, we retest. You can see so many reactions, especially this 1.30 level. This is the biggest magnetization level that we've seen, right? Support, 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 resistance, 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 and now we're trading above it again. So very important levels, very important thing to consider, these key levels, and it is really all we need. So key levels are super accurate. Key levels allow us to trade with the flow of the market, with the flow of accumulation and distribution of orders. So when orders are being executed and buys and sells are being pumped into the market, and they allow us to actually simplify our trading process. We don't have to sit here and try and work out, right, where's the most suitable resistance? Like, we don't have to sit here and actually look for the highs and lows to try and draw lines onto. which essentially are just lines that we've created in our head. We can instead just use the key levels by getting a horizontal line tool, using those zeros, 250s, 500s, 750s, and so on. And we're actually going to get the most accurate market levels. For example, me and my trading community took a short from 1.30. Now, if we actually look at the short that was executed, it was from here. Okay, so we sold the market from the 1.30 level when it came into this consolidation area. Now you can see how accurate that is, right? If we were to plot the 1.30 for our entry, for example's sake, 20 pip stop, 200 pip target, you'll see that we came into that level, reacted, and then tumbled, right? That is the kind of movement that you can catch when you can use these key levels. There's no need to go plotting them on yourself. Now, as an example, if you were just plotting them yourself rather than focusing on these key levels, right, you'd probably be looking at this level here, which acted as a resistance, support, and is now acting as resistance. So this is probably where you'd get your entry from, which, okay, that's fine. But the chances are you are not going to get that pinpoint entry that we got because you're actually focusing on this magical level that you invented yourself, which is the 1.2990. Now, that's not what we want to focus on. We want to focus on those 750s, 300s, 250s, 500s, etc. And that is what's going to give us the biggest, most accurate effect in the market. So that is key levels for now. We will be talking about key levels later on in the processes section when we bring everything together. But for now, what you should do is go onto the charts and plot on the zeros, 250s, 500s, 750s, various different currency pairs, and just watch and see how the market reacts to itself and to each of these levels over time. So thank you for watching, and I'll see you over in the next video.